Hello guys, this is another analysis, and in today's analysis I'm going to walk you through my analysis on gold, Nasdaq, and it's going to be both technical and the macro perspective. And starting with gold, I dropped the trade review of the trade I shared on my public Telegram channel. And I also drop a video analysis, the previous video before this, on my YouTube channel and TikTok, I think, as well as Facebook. And in a nutshell, we already know the order flow on gold is very bullish. And starting from weekly, this very week, I'm expecting a bullish expansion. I'm expecting the bullish candle to close above previous week high. We have previous week candle closing inside this large down candle. And before then, we saw this mitigation of this internal range liquidity. Previous week candle, that is the last week of February, we have seen how the market reacted on this bullish fair value gap. And since our order flow is bullish, we're expecting the market to come and take these relative equal highs, or rather the all-time high, and subsequently the 3,000 faus on gold, the big figure. So we are both ways very bullish on gold, and I'm expecting a weekly expansion on gold, weekly bullish expansion on gold. And on daily time frame, we can see that weekly fair value gap be refined perfectly to a daily fair value gap with a sell side liquidity, a pinch of sell side liquidity that was grabbed. Market grabbed this sell side liquidity on Friday of uh, February 2028, February 28, 2025. And then from there, we have continuation. And during the time we have this mitigation, I was in live session with my February March student, and I explained why this fair value gap is going to inverse, why this bearish fair value gap is going to fail, because this breakup structure is pseudo. It's not true. It's Pell's breakup structure. Some may consider this high, low, high displacement as bearish breakup structure, which is not. In a bullish market, when we see something like this, we know it is a trap, especially with the inducement of this sell side that has been taken, and then market coming back to this internal range liquidity. So it is obvious that we are expecting this as our draw liquidity for the coming week. And we want to see market closing, first of all, above previous week high. And we have market coming to mitigate this inversion fair value gap almost immediately. That is on Tuesday. And the low of the week was formed on Monday. The high of the week was formed on, I think, on Friday. And it was interesting, the last week price action, because I shared like a setup with my public group where we projected a 800 pips movement, and we caught 500 moves so far. And due to the NFE is why Wednesday and Thursday remain inside this range. We have a bit of consolidation from the high time frame, taking a look at how this candle closed, including the Friday. The Friday was a bit disappointing because it was NFE. Everyone was expecting aggressive move, and it doesn't happen because the market will not always do as you anticipate. So this inversion fair value gap, moving forward, I'm expecting at least a price coming back. That is the least I could expect. A price coming back to mitigate this daily inversion fair value gap. And we have this sell side liquidity, take note of it. And then for the market to push and continue soaring high. So I'm very bullish still on gold. And more especially when we look at factors such as the commitment of traders report. Let me see if I can have my browser nearby. When we consider factors such as the commitment of traders report, And it also indicates that the market is actually very, very bullish due to the report of what the commercials are doing and what the non-commercials are also doing. So let's take a look at the commitment of traders report on gold for this week and see for ourselves what the commercials are doing and what the non-commercials are also doing. Mark, you will always want to see our position matching with what the commercials are doing, right? So now let's go in together and see what they are doing. You know, there is a kind of a little bit of modification on the varchart.com. So if you are using varchart.com for your commitment of traders report or interest rate, kindly know that they do a little bit of modification. So you have to know how to navigate it. And if you see how I arrive at this, then you are lucky for paying attention to that. So we have the commitment of traders report right here, changing this to sorry, commitment of traders, and then we draw the chart. All right, so now we get to see what the commercials are doing. You see, the commercials, the non-commercials, I mean, they are on long position for this week, while the commercials are on short position. This tells you that we are still very bullish on gold, and the all-time high is our target. As I mentioned, that we want to see markets perhaps coming back one more time to that inversion fair value gap and then continue soaring high, which is a possibility. So that is what I have on gold, a bullish bias. And going down to 4 hour time frame, you already know if you are in Nasara public channel, you already saw the setup I shared before it happened. I shared this setup and we are swimming in profit still. Maybe it's time for you at market open to break even your trade, whatever, and this is the target. And then long term, we are expecting 3,000 for ounce on gold. And for Nasdaq, the indices market lately have been applying mechanical approach, honestly, because there was a time through January and February where reading the bias has been very, very challenging for me. And that is why I, opt for the mechanical approach because I have a better edge in that market condition, taking a look at the market mechanically. So Nasdaq also, when we look at the weekly chart, you can see the weekly chart to tell the story is very, very difficult on Nasdaq. But still, it's not impossible to tell the story. I can say that we are still on a bullish market on Nasdaq. The order flow is still bullish. It hasn't changed. All I can say with this down movement is a deep correction. We already know that the market always make corrections. And we have this volume imbalance. We have multiple mitigation on that volume imbalance, and we have this sell side liquidity. So market came all the way from the all-time high to sweep this relative equal lows. We have another relative equal lows, bunch of sell side liquidities. And then we have this weekly fair value gap, which seems to actually serve as support to continue sending price higher towards our all-time high. So with this, I do consider this as a retracement for the market to continue buying and subsequently come for the all-time high. And perhaps this is our last total soup, whatever, but we mitigate this high time frame key level, this internal range liquidity. And the next thing is for me to expect to see the market coming to this external range liquidity on Nasdaq. And checking the daily time frame, looking at the daily time frame, we can see that is why I said it was challenging to read the story, to tell the story on Nasdaq, but it is possible, especially with the weekly information we got, this weekly fair value gap sell side liquidity. So this can serve as a total soup. So we just need to see how the next candle close. If we can see the next candle closing above this high, then that is to be considered as potential shift in market structure on high time frame. And if this is a shifting market structure, that is when we see the next candle or the next couple candles closing above this high, then that will give me strong conviction to continue buying and to expect the movement towards this high. So for now, I cannot say I'm 50-50, but I can say I'm 60% bullish, and 60% of my mind is telling me to stay sideline or to continue applying the mechanical approach to trade Nasdaq in this type of market. So I'm bullish on Nasdaq, and for gold, I have shown you why I have strong conviction that we are still bullish, very, very bullish due to the commitment of traders report we have. And for the last one, I'm going to leave it to you as assignment, because not all knowledge are going to be shared for free. That is the uh, seasonal tendency. Go check seasonal tendency. Pretty sure my money on the table, pretty sure the seasonal tendency is telling you that we are bullish on gold as well. The interest rate as well is in favor of our analysis. So that is that for today's analysis. I hope you benefit with one thing or the other. If you do so, make sure you subscribe or make sure you follow. I don't know from which platform you are watching this analysis. Make sure you follow, and see you next time, guys. Cheers.